Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very grateful for life and thankful to be with you here this morning as we are going to be taking another fresh new look at the financial market. As usual, we shall be running through our daily routine to confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So, by typing hi, I get to have a feedback that we are all on the same page. And if there are any issues in terms of distortion of the sound, please feel free to let me know in the comment section and I will do the necessary adjustments. So I look forward to your feedback, please, and let's get this session started. Thank you very much as you do so. So I will be loading up my comment box and expect your comments and feedbacks. Thank you once again. All right, so I can see a handful of comments here from SG7800. Thank you very much. Florin 306, Panoyo 621, 222 Thank you very much. Giovanni, good morning to you. Thank you. Alcadala, good morning. Valia, good morning to you, and thank you very, very much. Alcadala says here that he cannot take profit. Well, I would encourage you to contact the customer service center where lodge your complaint there and they will duly attend to you. So you can link yourself with the contact center right in front of the home page of this app. At the top right hand corner of your screen, you will be seeing the logo of a head with a headset. So click on it and you will be directed to the contact center. So just contact them and they will advise you accordingly. All right. Okay, so with the handful of feedbacks here, I will take this as a positive one for us to kickstart the session. So on this note, I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today's trading session. And so far this week, we have been monitoring four major assets, which includes the US All Spot, the USTech100, the GBPUSD, and of course the XAUUSD, all of which have been doing pretty well since the beginning of the week. And in fact, the last 24 hours has been quite tremendous as we saw a significant decline in the US dollar following the Fed's interest rate decision yesterday, which was maintained at the range of 5.25 and 5.5%, just as expected. And in fact, in that regard, we were able to take advantage of a significant amount of profit across all board. So we are going to be diving deep into the details today to see what has really happened and how far we've gone on this one and how we will be managing our existing position as we get prepared for today's trading session. Now, I didn't forget you. For those of you who are joining us for the first time, you are highly welcome on board, and I'm very, very excited and glad to have you around with us this morning. I know you will be wondering right now that what is this all about and what is this forum you are in? Well, as technical traders, we usually gather here every day to come together as a community and engage in follow ups and reviews of our current positions in preparation of the New York trading session. Now, this session usually kickstarts officially 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today, especially as we anticipate the Bank of England's interest rate decision coming up later today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So, with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be affecting the market sentiment today. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for today, Thursday, December 14th, this is the beginning of the second half of the week, and in fact, we are heading towards the most interesting part of the week. So we have a series of high impactful events coming in from both the United States and the United Kingdom economic docket. Now, for today, Thursday, December 14th, the first one we are looking forward to is coming up in about an hour or two right now. In fact, they will be happening simultaneously. Now, the first one on the list here is the Bank of England's asset purchase facility. Now, for those who don't know what this is all about, well, this is a program through which the Bank of England purchases financial assets, typical government bonds, to stimulate economic activity and achieve monetary policy objectives. Now, the impact on market sentiment is significant as it signals the central bank's commitment to supporting the economy, influencing interest rates and overall financial market conditions. Then the second one on the list is one of the most important one for today, which is the Bank of England's interest rate decision, and this is an event that everyone is definitely looking forward to as the outcome of this meeting, where they decide whether to change or maintain the current interest rates usually happen. Now, this decision has a significant impact on market sentiment as it reflects the central bank's assessment of the economic conditions, and any changes can influence borrowing costs, investment, and of course overall economic activity. Now, there is a consensus in the market that the interest rate will remain unchanged, as we do know how the United Kingdom economy has been doing in the last couple of weeks now. It hasn't been doing very well at all, and this is due to the high interest rate, which is really affecting household spendings and businesses so far. So we have the opinion that there is likely going to be an interest rate unchanged, just like the Federal Reserve did yesterday. So we will be looking forward to see how the market participant will be anticipating this event and how we also going to be capitalizing on the next move as a result of this event. Then later on in the day, we'll be looking at the monetary policy report from the United Kingdom economic dossier, and this is a comprehensive assessment provided by the central bank to detailing the economic conditions, outlook, and the rationale behind monetary policy decisions. Its impact on market sentiment is significant as investors closely analyze this report for insight into future interest rate moves, inflation expectations, and the overall economic health of the economy. Then later on today, we will be looking at the retail sales data from the United States economic docket, and this is another key economic indicator that measures the total receipt of retail stores representing consumer spending. Now, it is impactful as well on the market sentiment as it provides insight into the health of the economy and consumer confidence, influencing expectations about future economic growth. So, with all we have here, it is quite clear that we have a handful of events that everyone in the market will be looking forward to. And of course, the anticipation of this event usually reflects on the chart as price action. Now, talking about price action, let's dive right into the business. And as usual, our first asset. So I didn't open my US oil charts early enough today, so it will take quite some time before this chart load up. I think a couple of seconds will be fine, and let's wait for it to load up while I refresh my page right here. I think I'm having issues with my comment section. Okay. All right, finally it has loaded up, and the next asset we are looking at this morning is going to be the USOILSPOT. In fact, I'm just beginning to see the comments in the comment section. Sorry, I'm just receiving all these ones right now. Let me just quickly run through and say hello to you guys. Okay, Modak, good morning to you. Alcada, I hope you've contacted the contact center to get your to get a resolutions to your complaint. Hello, Carrie, thank you very much. I'm just seeing your comment. Libadade, good morning to you. 773, good morning to you, and thank you very much. All right, so with that being said here, let's move into the USOILSPOT. And in fact, since the beginning of this week, we've done very, very well on the USOILSPOT as we had both buying and selling opportunities, and in both instances price action did move very, very well. And don't remember, if you remember, at the beginning of the week, we really did not have an interesting beginning to the week as we had a couple of losses after price action took us out of both buying and selling opportunities at the beginning of the week. Now let's run through that quickly, and for the sake of those who are not part of our earlier sessions, to have the privilege of being on the same page with us. So at the beginning of the week, we had this range here where price was confined within the $71.98 level, just approximately $72 area, just exactly around our key level for the week. Then we had the support line of that range at the $71.38 level. Then we had a sell position triggered. Remember, I told you prior to the beginning of our live session on Monday that price action has already opened up a sell position for me. And then if price will come back and retest the structure, we will be in an opportunity to join the decline. But unfortunately, that did not go well for us as price action moved up, taking us out of that sell position in a loss. Then we also saw the situation here where price action got our buy position triggered, had a breakout of the $71.98 level right on Tuesday as well, but it did not do very, very well, and it of course went into a loss before we finally talked about this right here on Tuesday, that if price action does break down both the $71.38 level, which shares a beautiful confluence with that ascending trend line, we will be getting ready to sell. And in fact, if you had missed out on the first breakdown, you will see here that the market did come back to retest the structure, giving us a beautiful opportunity to join the decline to the downside. Now, this continued interestingly for us, as we were able to maximize the bearish momentum by adding more sell positions at the breakdown of the $71 level. So we did had two positions minimum on that sell positions, where the first one ran over 320 plus before the bullish momentum came in, and the second one also ran for about 280 pips before the bullish momentum came in. So it was more of a positive first half of the week for us, though we started the week on a loss, but we were able to make some profit, recoup the loss we incurred, and in fact made some significant profit on top of it. And for those who capitalized on this, well done and kudos to you. Then during our live session yesterday, we begin to see something interesting unfold on this chart, as we saw price action confined within the range of the $69 level and the $68 area, remember, and this was where our center of focus was for yesterday. And one of the things we discussed here is that we might likely be seeing a reversal setup unfold, and that we will be using the $69 level as a breakout of the structure. Will be validating that reversal pattern, and that if price action breaks down the $68 area, then we will be looking out for a downtrend continuation opportunity. But unfortunately for sellers, price never even got close to that support line, so that negated the idea of even considering selling at all. Now, we saw price break out of the $69 area. In fact, if you had missed out on that one, the market came back to do a couple of retests of that structure, giving us the privilege to be part of that opportunity. And since then, price action had continued to climb new highs. So at this point in time, you should be having a minimum of 2 positions running. I personally have 3 positions, and the reason is simply because of this newly identified $70 level, which I did identify yesterday night to add more positions to my existing trade. So at the moment, the first buy position here is currently running with over 210 pips in profit, while my second position here is currently running with about 100 pips. And if you are taking advantage of that one, that's very, very beautiful of you. Then the third position has already been triggered. That is at the breakout of the $71 area, which we actually did identify during our live session yesterday, as that one is currently running with about 12 pips in profit at this point. So it has been quite an interesting week for us all on the US All Sports. And for those who still have a buy position running at this point in time, you do want to be moving your stop losses right now to secure the current buy position. And if you would ask me, I think anywhere below the $70.50 area and probably around that entry at the $70 area seems most appropriate to move all stop losses to. And do remember that whenever you're moving your stop losses, you want to give enough breathing space for price action to move around. So with a well secured position at this juncture, what is going to be our next line of action for today? How are we going to continue buying the US All Sport, or are there chances that sellers could come in at any point in time to push price to the downside? As remember, we had some technical structures which we will be looking at in a moment. But before we go into the technical details on the higher time frame, I would like us to understand the fundamental factors and situations that are driving the market sentiment from behind the scenes. Now, we all know what happened yesterday from the Federal Reserve meeting, where they made a decision to maintain the interest rate, and right now the market's focus has now shifted to towards a 3 potential rate cuts in 2024. Now, notably, yesterday, the latest data from the Energy Information Administration, the EIA, disclosed an unexpected drawdown in the U.S. crude oil reserves, marking a significant 4.259 million barrels decline for the week ending on December 8th. Now, this surpassed market expectations of a mere 650,000 decrease, and notably, it's contrasted with the prior week's substantial drop of 4.6 million barrels. Now, despite this surprising drawdown, the U.S. crude oil inventory remains slightly above 440 million barrels, with the Cushing, Oklahoma facility witnessing a recovery of an additional 1.2 million barrels. Now, the dovish stance conveyed by the Federal Reserve Chairman, Jerome Powell, yesterday has steered sentiments, suggesting that lower interest rate might alleviate borrowing costs, potential fostering economic growth, and subsequently bolstering oil demand. And if that is going to be the case, we might likely be seeing an increased demand in oil in the nearest future, and this could incite price to rise to the upside. So, as market participants shift towards today's release of US retail sales data, we are going to be keen on gaining further insight into the state of the US economy. And in light of this development, I will appreciate that you secure all your positions, as we've already mentioned earlier, as we could be seeing some volatility come in later today. So let's ensure our positions are well secured at this juncture. Now, with all this information, now let's run through the higher time frame. Let's have an holistic technical standpoint of what is going on in this market, and let's see how we intend to position ourselves for the next move. Now, looking at the 4 hours time frame, which was where our analysis started for the week, remember we saw here on the 4 hours time frame, after taking into consideration the nature of price action since the month of October. And what we saw here is quite an interesting bearish setup. After connecting the series of lower highs, we had the resistant line of that descending channel right there. And then after connecting the series of lower lows, we have the support line of that descending channel. Now, when price remains within the descending channel, obviously, we do want to be looking out for selling opportunities. Now, to guide our trading decisions for this week, we also marked out a key level at the $72 psychological area, considering the round figure of that price, as you will see here, as a yardstick to guide our trading decisions for this week. Now, you do know that whenever we have a key level like this, we usually want to be selling as long as price action remains below that structure. Now, we saw what happened last week as price action did break down that key level, then came back to retest the structure at the beginning of this week. Then a continued selling pressure around this area was what we needed to give us that opportunity that we took advantage of to sell the US oil spot. Now, yesterday, when we begin to notice some buy pressure here, we also capitalized on this move as price action is gradually approaching back into that key level. Now, going into the second half of this week, are we going to be seeing price break out of the key level this time around to incite an uptrend move, or are there chances that this area will remain a barrier for buyers as continued selling pressure could still incite another wave of downtrend movement? Now, with the information we have gathered here, let's scale back down into the 1 hour time frame so we can get to understand how market participants are reacting to this current structure, at least in the last 24 hours, for a well-informed trading decisions. Now, scaling back down into the 1 hour time frame, remember that we did add some multiple levels we marked out on this chart, and like I said earlier, we already have this $71 level broken to the upside, triggering another buy position, and I do hope you've moved your stop losses accordingly into the levels and zones we identified earlier. So as it is right now, it is very, very important that we secure all positions. And why is that? Well, if you look at the structure, we saw here that this zone between the $71.38 level and the $71 area was broken right here on Tuesday with an engulfing bearish candle. And not only this level was broken, we also saw the ascending trend line here broken as well. And from a technical standpoint, whenever we have this kind of breakdown of structure, we expect at some point in time price may likely come back to retest the structure, maybe this one to the downside, or could go as far as the ascending trend line to incite a downtrend scenario. So right now we are at a crucial juncture where price is back into that zone where it was broken yesterday. So at this point, it is very, very important that we move all stop losses, secure the position as we exercise patience and watch to see how the market participant will react to this area. Are we going to be seeing continued selling pressure? If that happens, then we might be getting ready to join a bearish move to the downside. So if price breaks down, retest the $71 area, and price action continue to find it difficult to climb back above the structure, then this could incite a continued downtrend scenario here. So below the $71 area, retest of structure will definitely welcome selling opportunities back to the downside. However, if price action does break out of the structure, then like it has just done right now, then we will continue to maintain a bullish bias. And personally, I do have a buy stop order above the $72 area to capitalize on this uptrend move. However, if the market is so kind enough that we begin to see something like series of higher highs and higher lows within this range, we could actually take advantage of that move even before the breakout of the $72 level happens. So that is the way we can maximize the bullish move on this particular asset. So this is my simple view on the US All Sport today. So like I said, we're at a crucial juncture. Let's see how the market will react to the zone, and that will determine if we are going to be adding more sell buy positions in the future, or probably getting ready to join the downtrend continuation from here. So if you have any questions whatsoever as regards to the current setup, or you need some further clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as reference points to guide your independent trading decisions for today. All right, so I see your comment here. Desty, good morning to you. Aman Lovely, good morning to you. Thank you for checking in. 140580. I see your comment too as well. All right, so in the absence of no questions, I will take this as a confirmation that we are all on the same page. And in that regard, let's move right into the next asset on our watch list. So the next asset on our watch list for today is the USTech100, which has been doing pretty well since the beginning of the week. And remember that we have been buying since the breakout of the $16,097 area at the beginning of the week, and we have rode this momentum with multiple buy entries, remember, all the way into this current structure, which is about 550 pips distance from our first entry point at the beginning of the week. Now, for those who missed out on our earlier editions on the Extreme Speed Live, let's run through how the week started for us all in this community and what led to the decisions we made. So I will just zoom right into this current structure, and as you will see here, at the beginning of the week we had a consolidation phase where price action was confined within the $16,097 level and the $16,037 area. That was about $60 range, where we begin to notice that there is an indecision going on in this particular market. And for the fact that price action was sitting above our key level, which is on the psychological area at the $16,000 area, it made quite a lot of sense for us to look out for buying opportunities. So as a result of this observation, we did position ourselves just above the $16,097 area to capture our first buy position for the week. And remember that we kept on adding more positions. We saw price break out of the 16,160, welcoming additional position right here. And on Tuesday's trading session following the CPI data, remember that we witnessed some volatility happen in this market where our range, which we identified prior to the CPI data, was between the 16,260, and of course remember that we had our stop losses somewhere right below the support line of that range, which took out our buy position with a considerable amount of profit. Then this volatility led to some couple of losses as we had a buy position triggered. Price came back into entry, taking us out of that position. But a second entry was successful as we saw price climb again above the 16,260 to trigger another buy position for us, and we continue to ride that momentum all the way into the 16,395. Now, during our live session yesterday, we did acknowledge that we will be adding another position at the breakout of the 16,395. And I told you yesterday that we are not going to be selling, remember, unless you are a counter trend trader, because of the fact that price action is still sitting above the ascending trend line that has been supporting our bullish buyers throughout the course of this week. Now, for the fact that price remained above this level, we positioned ourselves again above the 16,395 to capitalize on the uptrend continuation. It was a wonderful week for us all in this community, as this one also gave us about currently running with about 250 pips from yesterday's buy position at the breakout of the 16,395. Now, for those of you who capitalized on this opportunity, well done and kudos to you for being on standby. Now, at this juncture, if you still have a buy position running, it is appropriate that we move all stop losses right now and secure the current buy position. And the best area is this area around the 16,600 and let's say the 16,550 area. Place your stop losses anywhere within this area, and remember that you do want to be given enough breathing space for price action to move around. So with a well secured position at this juncture, what is going to be our plans for today? Well, it has been a tremendously bullish outlook in this market since the beginning of the year, and it appears that price action has the tendency of breaking new highs to set some records before the year ends. Now, how do we capitalize on the next move? Well, let's scale up into the higher time frame and let's see what is really going on from an holistic perspective. Now, if you remember that at the beginning of the week, we initially identified a range where price action since the month of November has been confined within a wide range of 16,160 and the 15,750 area. And of course, you know how we do it whenever we have this kind of range. We usually exercise patience for either the breakdown of the range to happen, giving us selling opportunities, or the breakout of the range to happen to give us buying opportunity. But the fact that price was far away from both the resistance line and the support line of that range, we decided to have a key level that will be guiding our decision for this week, which was situated exactly had a $16,000 area. And for the fact that price action was trading more at above the key level at the beginning of the week, making us to consider buying this asset, which finally led to the breakout of that 16,160 as price action now hits a new high at the 16,660 level. Now, with the way things are going right now, the question is, as you will see, as soon as price action tested the 16,660, in the last 12 hours, price selling pressure have persisted around that area. Now, the question here is, will this turn out to be some profit-taking activity, especially maybe tomorrow being the last trading day of the week as market participants round off for the end of the week in preparation of the weekend? We might likely see price action drop into maybe back into the 16,160 area before another wave of bullish momentum will happen. So these are things that we want to take into consideration. Or are we going to be seeing price climb up and then continue to find new highs? Well, I think I'm having some signs here that shows that network is not doing well. Give me a moment. Let me confirm this quickly and get back to you shortly. Hello everyone. Sorry for the break in transmission. Had some technical issues here, but thank goodness that we were able to resolve this in no time. And thank you for your patience. And right now we are back into the chart. So before the break in transmission, I was taking us through the 4 hours time frame on the USTech100, where we are trying to understand the psychology of price action on the higher time frame so we can have an holistic perspective into what is going on in this market. And like I said earlier, that price action has finally hit a peak at the 16,660 level, where we have been noticing some selling pressure happen here in the last 12 hours. Now, the question as we head into the New York session today is that will price action will market participants start considering some profit-taking activities as they get prepared for the end of the week? ahead of the weekend, which could result in some selling pressure back down into maybe the 16,160, maybe, or we could see a trend continuation pattern happen here to inside new highs. Now, to have a better understanding into what has been going on here in the last 12 hours, we would need to scale down into the 1 hour time frame. Now, on the 1 hour time frame, we have the first thing we want to acknowledge here is the fact that price action has been bullish since the beginning of the week, and as a result of this, we did connected the series of higher lows here, giving us this ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying that asset. Now, as it is right now, price action is just right above the ascending trend line, still opening up the idea that price action has a tendency of going to the upside. Now, another thing I would like to acknowledge here is that since price action tested that new high, we have a situation where price action has been confined within a range right now that is between the 16,660 and of course the 16,600. And of course, you know how we do it. Whenever price action falls into a range like this, we want to exercise patience and wait for either the breakout of the resistant line of the range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, if you look at this, the way things are going right now, and with the continued selling pressure after testing a new high, we might likely be seeing a short-term profit-taking activities if price action does break down the 16,600 with an intent of running down into either the ascending trend line that has been supporting the bullish momentum since the beginning of the week, or the 16,395 to incite an uptrend continuation. And if you look at this, this could be taking us about 180 pips to a maximum of 200 pips to catch if price action breaks down the 16,600 level. Now, there is a caveat to these selling opportunities here. Now, for those of us who do not feel comfortable in counter trend opportunities, or if you are not a scalper or a day trader, well, you might want to ignore this and wait for price to either come into this ascending trend line before now considering joining the uptrend continuation. And in fact, if price action breaks down the ascending trend line, it could incite a sell-off to the downside. So at this point, personally, I will stay clear of selling. But if you are a day trader or a scalper, you can feel comfortable selling. Well, you can take advantage of that move. We have a reasonable amount of profit on that one. So that's what we are looking at if price action does break down the 16,600. However, considering the strong bullish momentum we've been enjoying, and in fact with this bullish impulsive leg, we have a situation where price could transition into an uptrend continuation pattern where the breakout of the 16,660 will be welcoming more buying opportunities. So in that regard, I'm having a buy stop order above the 16,660 to capitalize on the uptrend continuation. Now, there is a caveat to this breakout of structure, which I usually mention during our live session, is that there are two ways to which you can capitalize on that one. Now, for those of you who have been part of the profitable journey so far, then you can afford to leverage on the profits you have made so far to test waters above the 16,660 level. So if you're already profitable, you can just place a buy stop order above the 16,660 to capitalize on the uptrend. However, if you are new with us and you do not have anything to leverage on, then I would encourage you to exercise patience. So as soon as we have a breakout of that structure, scale down to your lower time frame to look out for retest of structure to confirm that truly buyers will still be dictating the pace before jumping into any buy position here. So this is my view on the US Tech 100 for today. Our center of focus is basically between the 16,660 and the 16,600, where depending on the direction of those breakout will determine where price is likely going for the second half of this week. So mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever as regards to my current setup or my explanations, or you need some further clarification at some point, feel free to let me know in the comment section. So I will be taking the next 5 to 10 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move right in to the next asset on our watch list. We are really running out of time right now. So the next asset on our watch list for today is the GBPUSD, the cable market, of course, and we have a tremendously profitable position running right now. Personally, I didn't join this buy position early enough, as I only had my first buy stop order triggered here around the 1.25700 level. And for those of us who are joined early enough, well done to you guys, as you will definitely be in massive profit right now. Now, for the sake of those of us who are not part of our live session yesterday, let's run through how the week started for us all and what led to the decisions we made so far. And in the meantime, amidst the backdrop of a dovish Fed pivot, optimism has surged in the market right now, leading to the trigger of 3 buy positions for me, depending on where you place your own entry at this point. And the US dollar is at the moment considered weakened, as market participants eagerly anticipate the Bank of England's interest rate decision coming up later today for fresh policy cues. Now, the Bank of England is widely anticipated to maintain its key interest rate today, setting the stage for intense volatility in the pound sterling. Following the Bank of England's policy announcement later today. It is also worth noting that the UK economy contracted by a larger than expected 0.3% in October. Remember, we had the GDP data on Tuesday, which gave us something not too good. But as it is right now, and considering the weaker US dollar, I'm of the opinion that the pounds might use that opportunity to gain some traction as we prepare for the Bank of England's interest rate decisions today. Now, looking at the structure at the beginning of the week, we had a range identified, remember, where price action was trading between the 1.25580 level and the 1.25350 area, to emphasize the decision around that area. Now, coupled with this was the ascending trend line we spotted on the higher time frame, and for the fact that price action was sitting above the ascending trend line, we looked out for buying opportunities at the beginning of the week as soon as price breaks out of the resistant line of that range. And in fact, we had multiple breakouts of that structure. Look at what we had here. We had the first buy position triggered, price came back to entry point again. We had another one triggered right here, then we had another one triggered before the bearish momentum came in. And right here on Tuesday, we did said that if price action at any point in time breaks down the ascending trend line, we will be looking out for selling opportunities. So as at yesterday's live session, we did have a couple of sell positions running, and I can remember mentioning here that we should move all our stop losses accordingly, as we've been noticing that sellers are finding it difficult to break down that key level. In fact, around this area, the 1.252 area was such a strong level where market participants come in and find the pound sterling cheap enough to buy. Now, the fact that price remained above the zone, I told us all that we will need to exercise patience and only buy if price action climbs back above the ascending trend line, and look out for selling opportunities only at the breakdown retest of the structure, which of course never happened. So with my buy stop order above the ascending trend line, I capitalize on this uptrend move, giving me about over 150 pips right now, as I have 4 buy positions running at this point in time. Now, for those of us who capitalize on this opportunity, well done, and kudos to you for being on standby to capitalize on this particular move. Now, at this point, and for those of us who still have a buy position running, I would advise and encourage you to move your stop losses accordingly and secure this position. And if you would ask me, I will be saying that anywhere around the 1.26450 and the 1.26300 area seems most appropriate to move all stop losses to. And let's see how the market will play out from here. Now, in preparation for today's trading session, I marked out a level earlier at the 1.265 area, waiting for another breakout to happen so I can join the uptrend move, which already has been triggered right now. If you saw that, well done to you. And another level is going to be placed right here, since this is the highest point price action has been for this week, and that is the 1.26700 level, another psychological level to watch out for new buying opportunities. Now, for those of us who had missed out on the breakout of the 1.265 here, well, let's see if the market will come back and retest that structure. So if a retest of structure happens, we will be part of the bullish momentum, and if price goes on to break out of the 1.267, we look out for more opportunities to buy. So our center of focus for today is between the 1.265 and the 1.267 to capitalize on an uptrend continuation. Now, in as much as we're looking out for buying opportunities around this area, we cannot ignore the potentials that sellers could come in at any point in time. But if sellers come in here, I'm not going to be part of that move, and the reason is simply because the distance between where price action is right now and the ascending trend line is really not that much. It's about 65 pips thereabout. But if you're a counter trend trader, a scalper, well, you might want to capitalize on a $60 move, 60 pips move, sorry, like a breakdown retest of the 1.265 could incite a move back into the structure, where we could be seeing another wave of buying opportunity happens here. Well, for me, if price drops below the 1.265, I would have to wait for price to come into this trend line to see how price will react to the trend line to now decide if I'm going to be buying or adding or joining a bearish momentum to the downside. But as it is right now, I maintain a bullish bias and looking out for more buying opportunities at the breakout of the 1.26700 area. So this is my simple view on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the last asset on our watch list. So see you on the other side. All right. I see a couple of comments here. Caesar 333, Coin Trouble 999, Miriam 24, and Kole Sarimi. Good morning to you guys, and glad to have you around here with us this morning. So, in the absence of no questions, I'll take this as a confirmation that we are all on the same page, and in that regard, we shall move on to the next asset on our watch list. So the next asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot, and another phenomenal 24 hours we have here as we scoped over 1,400 pips on multiple buy entries as we capitalize on this bullish momentum all the way to the upside. In fact, congratulations to everyone who has been part of this profitable journey. Now, in fact, the weakening US dollar and Treasury bond yield following the Federal Reserve meeting have bolstered safe haven assets such as the gold. Now, the first decisions to maintain the interest rate at 5.25 stroke 5.50% aligned exactly with the market's expectation. Now, during the press conference, the Fed chairman Jerome Powell's statement about the Fed's willingness to cut rates even without a U.S. economic recession in 2024 resonated with market participants' expectations as well. Now, today the focus will be on the key U.S. economic data such as the weekly jobless claims and retail sales reports, which will likely guide market movements today. Now, given this landscape, it is very, very important to secure all existing positions at this juncture while remaining vigilant for new trading opportunities. Now, before we go into that, let's run through what really happened at the beginning of the week for the sake of those who are joining us for the first time. Now, if you look at the structure on the 1 hour time frame, the beginning of the week started with a strong bearish momentum, though price was initially confined within the $2,007.50 level and the 1,995 area, just oscillating around that our key level situated at the $2,000 mark, as you will see here. But one thing interesting we noticed during the first session for this week was the fact that price action was trading more closer to the support line of the range, and in fact trading below our key level, which is situated at the $2,000 mark. And of course, you know how we do it in this community. Whenever price action falls below our key level, we want to be looking out for patterns and structures that supports the idea of selling. Now, with this observation in mind, we did position ourselves below the support line of that range at the 1,995 level to join our first sell position for the week. Then remember that we had another level situated at the $1,991.50 level to capitalize on the downtrend move, and we did join these two moves. The first one gave us about 200 pips before the bullish momentum came in, while the second one dropped to about 150 pips before the bullish momentum came in. So we had about 400 pips going into Tuesday's trading session, but the inability of sellers to break through the 1,976 area made us to move all stop losses to secure the position. And if you had done that, you must have been taken out of that sell position with a reasonable amount of profit. Now, during our live session yesterday, we begin to notice a consistent pattern here. The first one is the fact that price action has been bearish since the beginning of the week, and in that regard, we were able to connect a series of lower highs to give us a couple of trend lines, which we said we will be using to guide our trading decisions for yesterday. And one thing we said here yesterday is that to be in alignment with this descending trend line, a breakdown of the 1976 level will be a good opportunity to join the decline to the downside. But we did mention that if at any point in time yesterday, price action breaks out and retests the descending trend line, then we will be good to buy the XAUUSD. And in fact, prior to the interest rate decision yesterday, I was already in the buy positions as we had the level, had the $1,983.50 level triggered with a stop loss of about 60 pips thereabout to protect any sudden pull down that could risk the buying potential here. But the stop loss was enough to hold that buy position, and then we had buy stop orders above the $1,991.50 level, the $2,000 area, and of course the $2,007.50 level, which triggered all buy positions, giving us 4 positions as price action rose into the 2040 zone, giving us over 1,400 pips from 4 entries on this one. Once again, congratulations to everyone who took advantage of this opportunity. Now, for those of us who still have a buy position running at this point in time, it is very, very important that you move all your stop losses anywhere below the $2,029 area, somewhere around there. And while you do so, please remember that you do want to be given enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying, or are there chances that sellers may come in, maybe as a result of profit taking activities? Well, if you look at the 1 hour time frame here, you will see that since price tested the 2040 during the Asian session, price action has transitioned into a range. As you will see, it is confined within the 2040 and the $2,029 area in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours right now, further emphasizing the level of indecision going on in this market. Now, if we take it a step further to mark out the lines using the line chart, you will see that we have something like an uptrend continuation pattern even within this range. I would like to lessen the pixel on this one. If we connect the series of higher lows and lower highs, we have something that looks more like a pennant to work with. So if I now readjust this based on the weeks of this candle, we should be having something like this, and everything is looking as if price action wants to continue the uptrend scenario, and of course we want to be on standby to capitalize on it. So personally, I have a buy stop order already above the $2,040 area so that we can maximize the potential of this bullish move. So let's see how far this momentum is going to go. We are at a crucial juncture right now where anything could actually happen. Then, in as much as we're looking out for buying opportunities from this area, we cannot ignore the potentials that sellers could come in as well. Now remember that we have this impulsive move since yesterday, and it is very, very likely as we approach the end of the week that those who had bought at a very cheap price, let's say around the 1,980, scooping in over $40, more than $60 from a particular position, might want to be considering taking some profit as well. So in that regard, we cannot ignore the potentials that sellers could come in from this area as well. Now, if you look at the structure here, you will see that selling pressure have been persisting around the 2040, and in the last 3 to 4 hours ago, we saw another rejection of that area, giving us signs that buyers are finding it difficult to break out of that barrier. Now, if this persists, we may see a situation where price could drop below the support line of that range at the 2029, where a retest of structure will be a beautiful confirmation to join a downtrend move. And if that is going to be the case, we might be looking at levels at $2007.50 level, $2000 area, the 1991.50, and the $1,983.50 level for TP targets for that sell positions, where we shall exercise patience as soon as price action gets into this level and wait to see if buy pressure will resume there to join the uptrend continuation. So let's keep that in mind while we also mark out these levels on our chart. So basically for today's trading session, we have a center of focus between the 2040 and the $2029 area, where depending on the direction of the breakout will give us an insight into where price may likely close by the end of this week. So mark out those levels on your chart. You really need them, and let's see how the market will play out from this particular area. So I hope I made myself very clear here. I will be taking some time off, to 10 to 15 seconds off, to see if there are any questions before we go ahead to round off on today's trading session. All right. So, in the absence of no questions, Wilfred Blay, good morning. Janine, good morning to you. Spain, good morning to you too. So, in the absence of no questions, I want to assume that we are all on the same page. And on this note, I would like to call it a day here at this point. Well, it has been a wonderful day. We were able to attend to 4 major financial instruments for today, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, all of which are done pretty well since the beginning of this week. And in fact, we were able to use our fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today's trading session, and of course position ourselves strategically for the next big move that is likely going to be happening today. So I would just encourage us all to exercise patience and allow our structures to mature before we jump into any positions. So I do hope you marked out those levels appropriately on your chart, and let's see how the market will play out going forward. So for those who joined us for the first time, I do hope you are able to gain 1 or 2 things during the course of the session. And if you truly did, you do want to be part of our subsequent editions. Trust me, the more time you spend with us, the better you will become at understanding our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. Now, always remember that the financial market is making a decision in the financial market is more or less an educated guess, and that you do want to ensure you have a risk management strategy in place, well-defined one, as you will need it at every point in time you want to be taking a position, as this will help you protect your portfolio against any sudden pullback or any sudden movement in price action against your perspective, and of course make you to live to trade another day as well. So, with that being said, here I'm going to be wishing us all the best of luck. I'm hoping to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and get ready for tomorrow's trading session, which promises to be an interesting one as we head into the last trading day of the week. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.